Hello, everyone. Good morning and welcome to this weekend's gold market analysis. So, last week, gold continued its downward movement as and closed just above the $3,260 zone. And of course, the technical structure you see on my screen right now was our technical details ahead of last week's trading session, where we had our key level duly situated at the 3,350, a very robust demand zone. And of course, we said we will continue to look out for buying ideas as long as price remains above that structure. And of course, we consider selling only if this structure and that ascending trend line is broken and retested to the downside, which was exactly what happened as we saw price close just right above the 3,260, which interestingly shares a confluence with that ascending trend line. And the bearish pressure we saw last week came mainly from easing geopolitical tensions, especially after reports of a possible Israel-Iran ceasefire. At the same time, the US dollar continued to gain strength against the gold due to the Fed's cautious stance, while inflation remained high in May. We also saw progress in the US trade talks with China, and that led to a pause on the expected tariff hikes. Altogether, this development reduced the need for investors to hold gold as a safe haven. However, there are still concerns in the background. For instance, last week, Thursday, the US GDP for Q1 showed a 0.5% contraction, as you will see here. Consumer expectation also dropped to 58.1, meaning people are becoming a bit less confident about the future of the US economy. Then, when you combine that signs of weakening income and spending, like we saw here on Friday, we saw personal income come in at a deficit of 0.4%. We saw the personal spending also come in at a deficit of 0.1%. This, of course, suggests that the economy is starting to feel the pressure. If this continues, the Fed may have to start balancing inflation concerns with the growing risk of a broader economic slowdown, and that could eventually weigh on the US dollar. Now, this puts us at a critical point as we head into the new week. The market is clearly watching closely, and the direction from here will largely depend on how traders and investors digest all this information. Are they more concerned about inflation staying sticky, or are they starting to worry that the US economy is slowing down faster than expected? This is the kind of environment where sentiment can shift quickly, and what we'll see on the chart will reveal whether the buyers are stepping back in or if the sellers are still in control. Now, looking ahead to the coming week, there are several high impactful events on the calendar to watch as catalyst for the week. We have speeches from the Fed chairman, which is coming up on Tuesday, as you will see. And then we have the ISM manufacturing PMI on Tuesday as well. Then on Wednesday, we have the ADP employment change. Thursday, we have the average hourly earnings, and then the non-farm payroll, and of course the ISM services PMI. A stronger than expected set of numbers could push the dollar even higher and put more pressure on gold. But if the data comes in soft, then we could see gold push back to the upside. Also, let's not forget we are stepping into the month of July. Historically, gold tends to slow down a bit during the middle of the year. But with everything happening right now in the market, this week might offer more than just quiet sideways movement. So, how am I preparing for the week ahead? As always, in this video, I will take you through how these fundamentals are showing up on the chart. I will share the key technical levels I'm watching, what price action is telling us about the current market psychology, and how you can position yourself smartly for the week ahead. Before we jump in, just a quick reminder, everything I share here is based on my personal analysis and experience. It's not financial advice, so always do your own due diligence and trade responsibly. So, with that said, here let's dive right into the chart. And my first point of contact is going to be on the 4 hours time frame. And after capturing the character of price action since March, of course, it is quite clear that the market is on a strong bullish move. Connecting the series of higher lows here gives us this beautiful ascending trend line to work with. Now, look at where price action closed last week, just right above that ascending trend line. Now, will this level be the platform that will send price climbing back up? Or are we going to see this ascending trend line broken, retested to send price crashing further to the downside? Now, to help me navigate this point, I have my key level for next week duly identified at the 3,260. And of course, if you go to as far back as the beginning of the month of April, you would have seen how this same level had played a significant role in determining if price will be going to the upside or to the downside. And since price broke above here mid-May, price action had continued to maintain pressure above this particular structure. And for the fact that price action closed last week around that key level, it makes it a critical point. As you will see, that same level also shares a confluence with that ascending trend line. Now, zooming into the current structure, this is what I am seeing here. Look at what has been going on here in the last 2 to 3 weeks. The market has been on a strong bearish move, and as a result, it had evolved into a descending channel. So, if we connect the series of lower highs, we have the resistance line of the descending channel. We connect the series of lower lows, we have the support line of the descending channel. Now, the question here is, will price respect the support line of the descending channel, which interestingly also shares a confluence with both the 3,260 and that major ascending trend line to incite an uptrend move where we could see price maybe test the resistant line of the descending channel back to the downside or even break it out to continue that uptrend scenario? Or are we going to see the support line of this descending channel broken, of course, with the key level and the ascending trend line to incite a sell off? So, with this information we have gathered here, you would agree with me that price is at a crucial juncture at this point, where depending on how market participants react to this level will determine if we are going to the upside or to the downside. But trust me, I will be with you in the comment section of this video at the beginning of the week to give you an update on what I'm going to be looking at after monitoring the character of price action around this confluence. So there you have it, my in-depth look at the XAUUSD for the week ahead. If this video in any way helped with your independent decisions, give it a thumbs up and drop a comment below. Of course, I want to know how you are approaching this market next week. And don't forget to subscribe for more analysis like this. Thanks for watching. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.